Prakash Diwan, Director, Altamount Capital Management as well, joins us on the show right now. Prakash, more legs to the rally?
Certainly looks like. I think we couldn't have been in a sweeter spot than this. We thought the momentum could start tapering off at certain levels. But, from the 6,300 where we spent a lot of time, the earlier peak, we've done phenomenally well. I mean, 7,500 looks like, and it's still not something that we are struggling on. It seems like the momentum continues to possibly, 7,700, 78, and the best part is there's an all-round participation that's coming through, which is where, there's not one sector that's kind of leading the charge, and we're not kind of risking ourselves too much on the, by banking on only one area of the market. So it's a good this thing, and yet retail participation is yet to come. So.
So 7,500 is almost here. But do you think another big move to 7,700 or 7,800, like you just talked about, is going to come before the budget, or will we have to wait after the?
Yeah, I think now the moves will not be as significant. As we go kind of on higher in the higher zone, things could kind of start tapering off. I mean, in the sense the moves, up moves could probably be in smaller and gradual, quantums. And the FI segment is definitely looking at the budget, because that's a huge policy vehicle of sorts, and that's going to decide the direction of the market for the next few years, because that kind of starts putting words into the mouth of whatever the new government has been talking about, and pre-election manifestos and all of those start getting into action. I think a lot of emerging market funds which are sitting on the fence, not the India dedicated ones, but the emerging market funds, would start allocating towards India only after the budget.
Okay, so maybe there could be a bit of a difference in the rally. Though, the counter question to that is that a lot of anticipation would anyways go into what are the sectors that will be obvious choices for reforms and therefore the rally. But we'll come to that later. For now, let's just look at the trade setup today. Global markets are positive. The news from EU has been heartening. Yes. And there's a possible news flow on the Reliance gas price or the gas price hike, which will augur well for ONGC RIL. You don't think that will take the markets further up? Because technically, Reliance has not participated in its own gusto till now at all. Yeah, so, as I said, the market will go up. You'll have different participants kind of leading the charge. It could be Reliance and ONGC. It could be automobiles. I don't think automobiles, except for the likes of Maruti and Hero MotoCorp in the last few days, have actually contributed so much to the up move. IT has been the drag of sorts, but that could also change sometime towards the end of June, once clarity emerges on the forex movement and how most of the larger companies have hedged their exposure. So my sense is that the markets will move up very comfortably. There's nothing stopping them from, going ahead. But it's not going to be, 200 points, 150 points on the Nifty every day. You'll probably have gradual 40, 50 points kind of up moves, profit booking in certain, because there's a lot of activity below the index, the mid cap and the small cap. There's a lot of froth. So what's happening is the index is kind of getting sidelined. Where are you seeing froth, Prakash? No, I think some of the, it's scary, but some of the failures of yesteryears have started resurfacing, and then there are volumes which you don't expect in certain stocks. You've not heard of these stocks for almost 5 years, and suddenly, they hit the 52-week highs and those 5% circuit filters. So that's something which people do take undue advantage of. Can't help it. But investors need to stay off from that enthusiasm and exuberance spilling over to the small cap side. So specifically, what about Reliance? Let's work with an assumption it'll open a couple of percentage points higher. It's an assumption, it may not happen. Would you be a buyer? Yeah, the GDR did indicate it went as high as 3% plus last night. I think there will be significant buying into Reliance, even if it doesn't open up with more than maybe 2%, 3% today. Subsequently, people will start, because this was a binary event of sorts. It's kind of out of the way. Things will look up very differently now. So it's not about, is it going to impact or not? It's definitely going to impact Reliance positively. So should I be buying Reliance now? The answer is yes, because you waited, as you said, it's not participated because it's still under-owned. After the buyback, I don't think there's been a gush of funds coming into Reliance by especially the large institutions. That could start changing dramatically.
What about Infosys, another high-level exit coming in? I mean, is this the right time to buy into Infi at all, or do you think this is now a chapter closed for Infi and you're not going to see re-emergence of leadership and good old days coming back?
No, I don't think so. I think, see, what's happening is there's this whole set of people, if you try drawing a pattern out of the people who moved out, in terms of the vintage, they all belong to a similar vintage. And this is where, you know, people who probably were part of the top management, senior management, when Infy started losing market share, started slipping from the league tables to the likes of TCS, HCL Tech. These are people sitting with a lot of ESOPs, a lot of money. You can't keep on questioning them. Nobody would like to be questioned if you're sitting with 100 crores of, net worth on why things are not going the way they were planned and why you failed on execution. So it's quite likely that it's kind of, you know, exits from people who don't want to be part of the game now. And they've kind of harvested whatever benefits they had. So you'll see a whole new set of talent coming in. And if Dell can absorb some of the guys who are moving out of Infosys on day one, I'm sure Infosys can hire some people from other players also. You know, I don't think that stops them. So talent is not an issue. It's about continuity. And as long as the clients are convinced about Infy's distinct delivery. You know, they made some strides in the recent times, just a second on that. And in the healthcare vertical, they've introduced a lot of things on the cloud computing where a cost for a CRAMS company could come down by about 80%. I mean, you know, research on pharma.
And others are not doing that? Other IT
This is a breakthrough. This is a new thing. So they're doing what they did with the Finacle, genre of financial solutions. They could do that with healthcare as well. Well, that's a vertical which is still not evolved as much as it has the potential to. So I think Infy is on the right side. You should buy it on dips. I think the currency would impact it this quarter. So you could probably see a little bit of 100, 130 bucks going down. But at those levels, it's definitely worth it.
But don't you think the bigger problem is also that one leading face that is missing right now?
It doesn't take too long to, really plug that gap. I mean, it could take maybe a quarter or so. But it's more important that the company is run like an institution, like a process-driven setup rather than a personality-driven thing. So in a way, it's good because
right now it is being run exactly the other way around.
Yeah. So as you said, so you'll probably have more faces coming in to kind of dilute the impact of only
Nandan Nilekani is one name which is being talked about.
Yeah, I mean there are always founders who come back and turn around things. It's always happened. But I think it's an issue on the vintage of most of the people that we've seen participate in the exits.
It's an interesting watch you're wearing, Prakash. Pretty much a Friday watch. the other one that I wanted to speak to you about, not strictly a mid cap, not strictly a large cap, is Havells India. It's been a stunning growth story for that stock. And all-time highs yesterday, business looking good, not strictly a cap goods company.
And Prakash has made a lot of money on it. Look at his smile.
No, I think the question is, can you make more on that?
You know, it's good to see people, new billionaires coming to the club. Kimat Gupta has finally made it to the list thanks to his ownership of the stock, and the stock's done well. I think the stock's just starting off a new, fresh up move of sorts. It's more to do with the introduction of GST is going to change the dynamics for some of these companies. These are companies which were struggling because of their production units being spaced out, the markets being all universal. And the same goes for some of the likes of V-Guard, Voltas, VIP. I mean, it's not necessarily electrical goods, I'm saying, but anybody who was struggling to take advantage of the disparity between sales tax with various geographies. If GST comes in, the kind of power they will have in terms of pricing and margins is going to be phenomenal. So I think it's a re-rating on that count. People are still kind of waking up to that reality.
So buy all the other names also that you were talking about.
Absolutely. So I think Havells could go all the way to 1400. There's no stopping it. Voltas, Cromptons, all of them 30% up just because of this impact.
Yeah, some of the smaller ones, Orient Electricals.
Yes, Bajaj Electricals. If you see the way Bajaj Electricals moved.
It's a horrible quarter,
but exactly, in spite of that, we've seen price action, which is favorable.
PSU banks. Are you a buyer? If so, in what stock? And please don't tell me a State Bank of India.
No, not at all. In fact, I'm glad you specified that. No, I still like the mid-size PSU banks. They are the ones where the magic can happen with leaner balance sheets and stuff like that. So you have very clearly an Andhra Bank. Of course, Andhra Bank's already run up quite a bit, so let's say it's out of fashion now. But you would still have a Union Bank, you would have a Syndicate Bank, a Federal Bank, great M&A candidates. Because I think the next wave is not recapitalization of banks, but it's M&A. So, all the likes of the Karnataka banks, the federal banks, the Catholic Syrian, the CUBs of the world will start getting into the news. But one of the oldest, old generation private sector banks, federal bank happens to be probably one of the prime candidates for that. And they have no plans to kind of continue in a way where they would expand and stuff like that. So I think these three banks, Federal, Union and Syndicate, are probably still, the levels at which they are available definitely augurs very well for another 30-35% upside.
Prakash, what about spaces like fertilizer, sugar? Lots is already in the pipeline and lots is being talked about as to what the new government is going to do to revive these spaces. Yeah. Any quick trades here?
Sugar is just more sops where that we can kind of start seeing, but and I hope the government stops at not going beyond a reasonable level of freebies and giveaways. But I think as sectors they would still be very politically more sensitive than power or infrastructure and all. So it's not the greatest of places to be in. But yes, because the run-up has not yet been very sharp, you could probably make some tactical trading calls on that. Within the sugar pack, I like Andhra Sugar. It's got a very diversified business model. It's more caustic soda actually that's contributing to the growth also. And possibly could look at RCF on the fertilizer space, or a complex company like Rallis or something, which is very differently positioned, but people do tend to talk about them in the same vein. But I think as a sector, as both these areas of interest, I would put them on the secondary level. There's still enough, opportunities in the primary sectors of infrastructure, banking, capital goods.